Welcome to Emerging Opportunities on New Markets TV, the show where we stretch your investment horizons across the globe. I'm Gavin Sirkin, and today we're focusing on a country that, amidst the global market gyrations of the past month, has really stood out among the best equity performers, spurred by the fastest economic growth in the Middle East. Can Egypt sustain its sudden momentum? Are foreign investors returning? To answer these questions, I'm delighted to welcome in our London studio Mohammed Farid Saleh, the chairman of the Egyptian Exchange, or EGX, and Kevin Daly, who is Emerging Markets Debt Portfolio Manager at Aberdeen Standard Investments. Mohammed, thanks very much for joining us. Let me first of all look back to the past month. It has been an unusual month. You've had economic indicators which have been much more buoyant than we've seen of late. You've had the IPO of Fowry. You've had, which is the first IPO in quite a long time, and you've had that big cut, 150 basis points cut in interest rates. So, basically, is this a blip from all of this good news, or do you see this momentum continuing?
Well, thank you, Gavin, for the interview. And indeed, we had a very good month in terms of volumes and values of trading as well, not only a matter of performance. The market responded nicely to several factors, not only a cut in interest rate or an IPO. However, one of the main items and problems that were present in the market, it was resolved amongst the different stakeholders pertinent to this problem. And this gave an indication that it's not only a matter of easing of conducting business when you want to come in the market, but as well exiting the market. You will find all stakeholders on the same table participating in resolving the problems. So this given a very strong indication that actually resolving problems and resolving the issues pertinent to any listed company is one of the key priorities of the different stakeholders. So this was a very clear and strong indication for market participants of the business environment in Egypt. A second aspect, as you mentioned, rightly so, was the IPO that we have seen recently in the Egyptian market, the oversubscription, the sector as well that the IPO has been operating in. It is quite a successful story, let's put it this way. A company that has been established 9 years ago in the area of fintech or financial technology in the payments. It had its losses as from an entrepreneurial perspective, the cash flow cycle of companies, and then it was successful enough to come an IPO for the public in this area. And when you look at the other variables, what is more important than the interest rate cut, honestly speaking, it is actually having inflation under control. In Egypt, we conducted a very comprehensive and aggressive reform program in November 2016 that aimed at restoring macroeconomic balances in the country. We have proper fiscal policy, proper monetary policy, and strong and prudent as well. So one of the very strong and important aspects was to have inflation under control. We had inflation after the subsidy cuts that took place, spiraling a little bit in the Egyptian economy. However, with the prudent monetary policy, we got to see inflation receding to single digits after being in the double digits, around 33% of high levels after the devaluation of the currency. So seeing inflation in a single digit territory, paving the way for an easing in the monetary policy cycle, was one of the prudent decisions that, again, showed confidence to investors that you have a proper macroeconomic setup being set in place, in addition to, of course, the sectoral aspects that the country is reforming and the performance of the market.
Kevin, you've got a strong conviction on Egypt as one of the, I think, 3 or so countries that you have that strong conviction from a fixed income side, from the debt side. What's the reason for that?
Well, I mean, first of all, as we've just heard, the reform story in Egypt has been pretty strong. If you go back to the commencement of the IMF program, where the IMF required Egypt to float the currency, and you saw the currency go from 10.6 to 20, and it overshot, right? It overshot the fair value. From that moment, we started to look at the local rate story. Now, of course, at the time, government was only issuing T-bills because of the interest rates were elevated. Again, they were around 20%. That was sort of our opportunity to start getting involved in the local trade. And today you've seen rates, T-bills are down at around 16.5%. They're starting to issue more bonds. So what we're doing now is extending into sort of 5-year, 7-year, 10-year bonds. In anticipation of the central bank easing. And obviously we saw the 150 basis point cut last month, which was larger than expected.
Yeah, so what difference did that make to your holdings, to your outlook?
Well, we saw strong gains on our T-bills and on our bond position, right? Because yields have come down sharply. So, and you know, again, there's scope for probably another 100, 150 basis points of cuts. I think, you know, for investors, the carry is still attractive in Egypt local, so we very much like the story. Inflation at a 4-year low now, 8.7% year on year. You know, growth is strong, debt GDP is falling. You know, the primary surplus is intact. That means your debt GDP will continue on a declining path. The current account has obviously improved dramatically. And yeah, and I think, you know, if you're looking for, again, if there's one sort of potential risk out there with Egypt, because you always think as an investor, what can go wrong, right? Because the story looks very strong. The headline fiscal deficit is still high, right? It's around 8%. It's supposed to come down to 7% this year, next year. So, you know, that means Egypt still needs to issue a lot of debt. So if we get into a situation where fixed income markets start to get bearish and investors, you know, are showing reduced appetite to buy the likes of an Egypt or other EM countries, then that potentially could, you know, weigh on again, their borrowing costs will potentially go higher. So, but for the time being, the story looks very strong. The government officials were in town this week. I met with them, and really my summary from meeting them was what's not to like about the story.
Okay, so let's drill down from that macro picture to some of the companies on the exchange. And we, you know, as we mentioned, Fowry, the electronic payments company, long track record, 9 years, come onto the stock market, but it is the first IPO since 2018. You know, this hasn't been quite the flow that people had expected from the government schedule. What does the IPO train look like from here?
One point just to elaborate on the concept or the macroeconomic reforms, that it wasn't the IMF dictating, honestly speaking, what is to be done from a government perspective. It was a homegrown program that has been presented by the IMF and endorsed by the IMF, but at the end all the reform measures that were implemented in Egypt, from fiscal consolidation to monetary policy management and so on and so forth, are homegrown policies that has been endorsed by the IMF. So it's an Egyptian program, took the support, of course, with the IMF and the funding from the IMF in this regard. So this is just a point of clarity that I wanted to add. When it comes to the IPOs, in general, when you look at international trends in IPO, we'll find that new companies in general has been, or the IPOs in general in world markets, has been on the decline. So it's not only an Egypt phenomena, given the turbulent periods that we got to witness end of 2018, or actually starting from May 2018. Until probably April 2019, it was a very turbulent time for emerging markets and for advanced markets as well. So basically, this definitely hindered the appetite or lowered the appetite of private sector companies to come. Having said that, with the successful IPO that we have been seeing, it's the second one, not the first one. The first one was maybe in the small and medium enterprises area, but
first major one.
Yeah, exactly, first major one. We have two in the pipeline from the private sector. However,
which are they, mate?
I mean, we don't disclose names. So basically, they are interested in the IPO. However, the timing would depend entirely on the speed of having their books in place, of having the governance structures in place. Because the same time we are hoping for IPOs, we need to protect investors with the proper disclosures, governance structures that need to be set in place. So some of the requirements associated with companies is to have in their bylaws the concept of cumulative voting to allow for minority shareholders to be represented in boards, to have independent board members, to have an audit committee from the board members. So all of these aspects need to be put in place, set in place, ensuring that it's working well before going to the IPO. So this aspect is of paramount importance to us.
These two companies, can I push you on the sectors, or some, you know, are they bigger than Fowry, or
they are diverse? One bigger, one smaller than Fowry, but in all cases, we're waiting to see what's going to happen in terms of the public. I would say IPOs or the state-owned enterprises. Probably we're going to see it next year, the delay because of getting companies prepared and ready. That's why we need to make sure that the first SOEs, after a long period of time of not having any public IPOs, being successful. Having said that, during this year we had a secondary offering by one of the state-owned companies, whereby an additional stake owned by the company, by an additional stake, we don't mention an additional stake mentioned, listed on EGX, was floated around 4.5%. So basically this was a partial IPO, whereby it was open as well partially to subscription from the public and for private investors as well to participate in the private placement in this regard. So we have some activity. When you go to the private sector, in terms of secondary offerings, we had 3 successful ones, whereby expanding the ownership across different investors happened in 3 private sector companies. The last one was today.
Okay, well, there does seem to be plenty of demand to support IPOs and equity sales from investors. In fact, emerging market fund managers globally are more overweight on Egypt relative to benchmark indexes than any other Middle East or North African country. That's according to data compiled by Copley Fund Research, which monitors about $1.2 trillion of funds globally. Egypt's biggest bank, Commercial International Bank, or CIB, is the region's most widely held stock, owned by 24% of global emerging market funds. So the question that I want to ask you, Kevin, from the fixed income side is, you know, how do you drill down into the economy from fixed income? Because you know, you've got the array of sovereign securities. You've also got the hard currency versus the local currency, and I know you favour the local currency. So just take us through that.
In some funds, I do favor the local currency. So, for example, in our dedicated Frontier Bond Fund, we have a large position in the Egyptian local bonds, T-bills and bonds, right? That's about 7%. A little bit of external. In our other funds, we have a lot more external debt in Egypt. And in fact, just to add to your comment on the ownership, according to the last JP Morgan survey, which we participate in every month, Egypt is now the largest overweight on external debt. So it just shows you that the market is actually looking at this story as an improving credit story. You're still getting decent, decent carry on your dollar bonds as well. But for us, owning the local market, local bonds, we think is still a very attractive opportunity, despite the fact that rates have come down by literally 150 basis points on your T-bills and 80 to 100 basis points on your bonds, depending on what part of the curve it is. So, and then on top of that, you've got your withholding tax too. So your net yield is coming down, but it's still an attractive story because actually the currency has been appreciating this year, which is another attractive feature of the local trade. At some point, I think investors will start to take money out of that market. But another potential positive for Egypt in the horizon is they're going to get Euroclear. They're going to get their bonds be able to clear through Euroclear. That means investors don't have to access local accounts in Egypt. That will make it easier for offshore investors to buy the local bonds. That's expected at some point next year. And I think they're also working on inclusion to JP Morgan's GBI index, which again will mean there'll be a structural bid for Egyptian local currency bonds once they get inclusion in the GBI. So there's definitely some, despite the fact yields are coming down, there's still some attractive features for the local bonds. And I think foreign participation will still remain fairly strong next year.
Okay, so that's an interesting point from the foreign investor perspective about the actual infrastructure of the market, the Euroclear element. I know that you announced this week about introducing short selling to the Egyptian exchange for the first time, which is about introducing more liquidity. Tell us about the rationale there, because I suppose one of the big issues for foreign investors is that there's not enough for the really big global funds to buy of significance on the Egyptian exchange, and that's what keeps global funds sometimes from going into the market. First of all, can you see very much coming along the IPOs that would be of that kind of significant size? And secondly, on the short selling, how significant an effect is that going to be from a foreign investor perspective?
Well, for the IPOs, definitely the state-owned ones would be sizable enough that would cater for the ticket sizes of foreign investors or non-Egyptian investors as we speak. And for domestic institutional investors as well, their ticket sizes are quite significant compared to retail traders. So the state-owned ones are definitely of the size that would be palatable enough or attractive enough for investors. When it comes to short selling, at the end, you need to have the complete set of mechanisms available to investors. We have had introduced margin trading early as 2004. In the same regulatory framework, we had short selling. However, it wasn't implemented since that date. So basically, we need to have the complete set. You have, from the one hand, margin trading is being available, and brokerage investment banks and custodian banks are providing sufficient liquidity to investors should they wish to extend their positions. On the same hand, however, you don't have on the other side from the coin, the short selling. So short selling should be available before end of year. We worked hard with the regulators, worked hard with the clearing houses, with the clearing house in Egypt on setting up the complete, I would say, mechanism for it. It's not a naked short selling mechanism. It's whereby you do the proper borrowing and lending first, or lending and borrowing, and then you go for short selling the stocks. There were requirements from the Egyptian exchange that needed to be published, among which was the criteria of choosing which stocks are allowed to be short sold. In addition to that, at the announcement of the criteria, in addition to the technological requirements or the IT requirements to ensure that the trades are on an uptick or a zero tick basis. So that's the importance of short selling, that you need to complete the mechanisms and to allow directional trades for investors, whatever is the direction in this regard. And this should add further depth and further free float to the market, which would again enhance institutional investors, whether being domestic, international, to trade in the Egyptian market. To capitalize on the capital on the fixed income side, we're working as the Egyptian Exchange closely with the Ministry of Finance and the Central Bank of Egypt on revamping the local, I would say, infrastructure for trading of T-bills and T-bonds together in this area, and they have done a tremendous job like that I would like to tell, I mean, to elaborate on, adding to that, of course, the Euroclearability aspect and the index inclusion that they're tinkering with, or they're endeavoring to put in the indices. So having this, I would say, dealership system in place as well should be helping the liquidity aspect, to help fixed income traders to be able to trade long dated bonds rather than to extend the yield curve basically of Egypt, rather than having the focus on short-term notes.
Okay. When you look at the Egyptian economy, we've seen a lot of momentum. You know, growth is high, but it's still uneven. You still do have poverty rates rising. How widespread do you think the gains are across the board on the Egyptian exchange? You know, which sectors are particularly benefiting right now from the economy, and which sectors are perhaps not so great?
Well, you have various sectors. I mean, when you look at the net purchasing activity of non-Egyptians in the market, you would get to see that it is quite diversified. So it's not only one sector that it's overtaking the trading of foreign investors. You would find the banking, the financial sector excluding the banking, the industrial, education sector. We have a new trend that corporatizing education in Egypt is quite important, and having these corporates being listed and traded, it's a very defensive sector, and it's helping much in terms of expanding the education sphere and improving education as well. Healthcare and pharmaceuticals as well is one of the sectors that is quite attractive to the entire domain. Mentioning poverty, it is worthy of mention that one of the main, I would say, strong aspects of the current program is the belief and the understanding that the trickle-down effect theory, or the trickle-down theory that has been believed in for ages, is not working. I mean, we need to be realistic about the expectations here. So you need to have, while doing macroeconomic reforms to restore the stability, while doing sectoral reforms to jumpstart the economic activity, and this happened with while seeing economic growth rates surpassing 5% for a long number of quarters. You need to have social safety nets in place that are supporting the least privileged, that are going to be affected with the reforms. So the trickle down, usually what used to happen before is the belief that you just need to create growth and then everything will fall in place and you will be satisfied. However, it's not the case. You need to have interventions on the on the social stance to enable, I would say, the least privileged to gain or at least mitigate the negative implications of that point. Having said that, it is very much normal to see with strong reforms like the one we do, prices increasing, incomes following with the high growth rate sustainable. To be just sustainable for a long period of time, incomes would grow to mitigate what happened in terms of the prices during the reform period.
Okay, I wanted to focus on Egypt, but I also want to span out to a few of the other countries that, Kevin, you're engaged in. I know that Argentina was one that in some of your funds you rather presciently scaled back on in July ahead of the primary election and the result that led to the market collapse. How bad are things looking from a markets perspective or an economic perspective in Argentina?
Well, I mean, first of all, we're going to see inflation soaring again. Recession coming back again next year. So, it's going to be another difficult road ahead. On top of that, we don't know what the Team Fernandez is going to do in terms of their relationship with the IMF, because Alberto Fernandez's comments earlier this week, which really spooked the market, his comments about the relationship with the IMF. IMF has a $5.4 billion disbursement supposed to be coming at the end of this month. Probably the chances of that are looking very remote now. So, clearly the economic, tremors, the shocks that we've seen the last 2-3 weeks from the PASO result is clearly going to be felt next year. So difficult road ahead, no doubt, for that country. And I think they're going to probably implement some price controls to minimize the effect on the broader population, because that's one of the claims that Alberto Fernandez made, which is that Macri and the IMF have created this huge amount of poverty for Argentinians. So it's a little bit disingenuous, because the market reaction is based on this new government's policies coming in, not on Macri. So, but it is what it is in terms of the market impact. And now we're looking at Argentina having to restructure their debt again. We're it's back to the future for Argentina.
You mentioned your conviction buy on Egypt right now. Another one of those is on Nigeria, on the local bonds. So, there's been Nigeria's had a hard press, I guess, from the Buhari government being seen as lackluster on economic policy. What gives you the optimism in Nigeria?
Well, there's two things. One, oil prices still remain high. So the carry trade, as we call it, in Nigeria local is still an attractive one. FX reserves also, same story with Egypt, where you've seen a big increase in FX reserves the last few years. And as an investor, that gives you comfort that the central bank can provide dollars for us if we need to close out our positions. The governor was in town a few weeks ago. I think his comments did add some support to the market, because what he said was if oil has to fall below $45 a barrel, and reserves would have to go down to 30 billion for us to really get concerned about the exchange rate. So, he reiterated the importance of maintaining a stable exchange rate. So it's not appreciating like we've seen with the Egyptian pound, because again, the fundamentals in Egypt are much stronger than Nigeria's, but it's still relatively stable. But that, as we know, with Nigeria's past in 2015-16, that can change. And if you're not careful as an investor, the risk is that you could get stuck in that market again, where the exchange rate blows up and you're left sitting on some large losses.
Okay, well, thank you, Kevin, and thank you, Mohammed. I want to stay in Nigeria now and focus on a major campaign for gender equality that's gaining momentum across the African continent, from villages to the executive boardrooms. And Nkiru is the founder of African Women on Board and joins us live. Nkiru, welcome to Emerging Opportunities. Tell us about African Women on Board. What, in concrete terms, is your organisation setting out to achieve?
Hi, Gavin. It's great to be here. Thanks for having me. We're trying to have African women involved in the global conversation around gender equity. And just want to quickly touch base on what Mohammed was saying about alleviating poverty. I think a way to do that quickly is actually deliberately engaging women across all platforms on the continent. And I think that's a quick way of helping with the poverty issues on the continent.
And so, how do you actually realise that mission? Because you're taking on a huge mission there. In concrete terms do you go about this?
I mean, I think it's about narratives, like the narratives that are being told about African women, about Africa generally, but particularly the stories that are being told about what we're doing. It's how people are seeing us, how we're being seen as, whether we're investable portfolios, who's investing in African women, who's investing in things that have to do with African women. And I think that's one way of doing things, changing the conversations, changing the stories, sort of pointing to the success stories rather than the negative stories. I think that's a quick way of what we're trying to do is to do that.
And I know you've amassed a lot of support across the continent and also outside of the continent. Tell us about some of the people that you have involved in the campaign.
I mean, we have we have a number of people. We have the Nigerian Stock Exchange, we have the Bank of Industry, we have Ford Foundation, we have quite a number of people who are sort of joining us. We have people across the continent. We have, from Ghana, from South Africa. Even we have a lot of people from the diaspora, because our point is Black women, African women have the same issues generally. And so if we sort of bind together to do stuff, then perhaps things will change for the continent.
Okay. And how do you bring this home? Because I mean, you're not just talking to executive, you're not just talking to governments, you're talking also to at the village level to change hearts and minds. How do you actually go about that?
We're engaging, people from the bottom and from the top. We're saying that, it's time to change mindsets about who we are as Africans. We're saying that there has to be, new conversations about what we need. We're saying, yes, there are challenges, but there's also, real stories of success that haven't been presented to the world. And we're saying that when these things are changed, from whether it's from the marketplace, from the boardrooms, when you have more women deliberately involved, then real change will actually happen. And so we are having, for example, our launch at the Ford Foundation during the UNGA, when we're inviting people to tell their stories about how they've combated issues of diversity and issues of gender, and sort of like how have they resolved that for themselves to create this new story around Africa.
Okay, that's quite a major event, I guess, because that's during United Nations General Assembly Week. Just lay that out. What's the event going to be? How do people, if they want to get involved, what support are you looking for?
We're looking for women and men. We're looking for women and men who are influential to actually say, this is an important conversation. We're looking for change makers. We're looking for people like Mohammed, who's on your show today, to say engaging women on the continent is super important for growth. We're looking for the world to say that African women's voices have to be included in the conversation around gender equity. We're looking to seize the moment about gender, to say if you have a conversation around gender equity that does not include African women, then it's not a conversation that's inclusive.
And how much progress do you think is actually being made?
I mean, I think we're making a lot of progress. I think that obviously there's challenges ahead. It's a huge feat that we're undertaking, so I don't think this is going to happen in a year or two. But we're saying that if we deliberately do stuff over the next 5 to 10 years, there's stuff we can do that's effective. We're saying that if African governments, if companies, if they took this as serious as they take things like climate change or whatever else is going on, then things will actually begin to change. Mindsets will begin to change. We're looking for men as allies. We're saying that we need powerful men to actually sort of like shine the light on this, to champion the cause, and then the change will then begin to happen.
Okay, and a very inspiring message. Thank you very much, Nkiru. I'd like to thank Nkiru and the other guests that we have, Mohammed Farid Saleh, Chairman of the Egyptian Exchange, Kevin Daly, Emerging Markets Debt Portfolio Manager at Aberdeen Standard, and Nkiru Balonwu, who is the founder of African Women on Board. I'm Gavin Sirkin, and I'll be back with more emerging opportunities on New Markets TV on the first Thursday of every month at the same time. If there's a market or a sector that you'd like us to focus on, or if you have some news for New Markets, we'd love to hear from you. So please do get in touch on Twitter at New Markets Media. See you next time.